Everybody, thank you for tuning in. Today is really geared toward first-time investors that you're kind of trying to choose your path where you want to invest. So I'm always out in the field looking for people that I can talk to bring in and really help give you some advice and maybe give you an idea on a path that you can take. And today I was brought in my friend Chris. Chris works at Commercial Brokers International. He has a background in triple net properties in mostly the Midwest, correct?
Yes.
So Chris is going to come here and tell us about his path into triple net and maybe something that interests you. So Chris, first of all, thank you for coming in today.
Thank you for having me.
Why don't you tell a little bit about your background, how you got started in triple net properties, and why that's the path that you chose?
So a little bit about me. I started with a few QSRs in the Midwest, some Yum brand restaurants, and then I went on to Church's Chicken.
You're going to want to explain what QSR is.
So QSR is quick service
for some of the newer investors.
So QSR is a quick service restaurants. Primarily think about McDonald's, Chick-fil-A, Carl's Jr., etc. So I was an operator or franchisee for those types of restaurants in the Midwest. After that, we tried to do during that time, we tried to do a few purchases of the properties we had. One of our partners had properties that he was an owner of in another state in Indiana, and he was interested in selling one of the properties in order to expand the business. So that would bring us to our first topic, is a sale leaseback. Basically, what he was trying to do is he had a very poor balance sheet with a lot of debt on it, and he couldn't get any capital to expand his business to buy another market.
How did he get all the debt?
He owned from the equipment that he purchased, from the purchase of the land and the building, that just tied up all his capital. Okay. And because he had all the buildings and all the equipment, and it was just so short into it, he didn't have any money to expand.
Okay.
He didn't have him raise the cash to pay off any of the loans. So what he did was do a sale leaseback. He basically sold the land on one of his restaurants and then leased it back to himself in a long-term lease.
Okay.
So that freed up a lot of debt in the building and took a lot of equity out. And he made sure when he did this sale leaseback that he got favorable terms. He made sure you can negotiate all this. Your escalations can be for certain percentages. They can be tied to certain indexes. You can have it hit at certain years too. It doesn't have to be 5 years. You can work that all in.
Yeah, isn't this the way that McDonald's kind of got their whole start?
Yeah.
It was down this very path.
Yeah. And McDonald's actually, I think they are more of the long term.
Right.
But they're starting to sell, the corporate's starting to sell a little bit of their portfolio.
Okay.
But they own all the land on their restaurants. And they are basically the standard in QSR in single tenant triple net leases. So a single tenant triple net lease is basically like the land that a McDonald's would sit on, or a standalone restaurant would sit on, or it could be in the end of a shopping center as well. But a single tenant triple net lease has a lot of benefits for an investor, especially an investor who has a primary day job, say a dentist, a doctor, someone who wants to be hands off on the investment. With a single tenant triple net lease, the tenant covers the three nets: your insurance, your taxes, and the maintenance of the restaurant. So with those three expenses covered, the landlord or the owner, the investor, is only really interested in paying the loan off, and everything else is covered. So he has a very safe bet. And right now with the market, I mean, it's one of the safest bets you can have with the least amount of exposure.
Sure.
Especially with fluctuating cap rates going up and down, compressing, expanding. You have markets that are very inconsistent right now, especially with what's going on in Washington. Everything's just crazy right now. One year they're up, there might be a recession coming. So the single tenant triple net lease is a great hedge on that event to come.
Let me ask you something now. If you're considering investing in triple nets, now they come with the different size franchises, and it obviously just depends on the company too, but the franchise. But you want to look at the franchisee and see if you can get a corporate guarantee, or at least a regional guarantee from the operator, correct?
Yes, and usually
you really got to look at the operator to know how good. If they've been a great operator, then if they're going to guarantee the lease, then that helps a lot.
Yeah, and I mean most single tenant triple net leases are guaranteed by the corporate company, and that's another great benefit to that. So if next 30 years or 20 years, however long the lease is promised. So that really, no matter what happens in the real estate market, if there's a recession, that investor is still going to collect that. The money's going to still keep coming in.
What if it burns down?
Hey, well, that's what the insurance is for. That's why the tenant pays their insurance. And
don't. In some situations, in the lease, they can put you into another location that's just the same or higher producing revenue.
They can do that in a lease.
Yeah.
It's all about how you negotiate your lease.
Yeah.
Obviously, you know, if you have more clauses in there, you might be paying a higher premium. If you have less
Right.
insurances, then you might be paying less, just like any other business. But I mean, for the most part, that's why it's a very safe investment. If something were to happen to the restaurant, I've had several fires happen in my restaurants, and we had the option to do that, but instead we took the money. Yeah, it happens. Instead, we took that money and just put it back into fixing the restaurant up, and we're closed for a short amount of time.
Maybe, Mr. Insurance Company, you better be watching this one. Several fires, huh?
That's why we have camera systems and security systems to have everything displayed on what happened.
You have a lot of frying, maybe?
They're all deep fryers, actually.
Yeah.
Well, one was an electrical fire in the back, but one of them was a deep fryer.
Over time, yeah, it's gonna happen.
And that's another reason why you want to make sure you have the
Right insurance, yeah.
because your insurance could go up with the tenant depending on what happens or the type of business in there.
Right. Okay. Now, do you have a place? Let's say I'm an investor in Nebraska, and I want to buy a franchise location in California. Good idea or no?
It depends what you're looking for. Every investor has different needs and wants.
Right.
I mean, if you're looking for cash on cash, you want a high cap return, I'd say stay in the Midwest. If you're looking for a 1031 exchange, you're looking to go up in wealth, and you're looking to keep your sustained cash flow, I'd say California is a great investment for that person.
Right.
You know, everybody is different in what their needs and wants are and their levels. If you know, California is a much higher playing field than if you're looking at Nebraska, single tenant triple net leases, or you're looking at Florida.
I was actually setting you up a little bit because I'm from Nebraska, and if my family ever bought property out here, they'd be coming to visiting all the time. So you're supposed to know it's not a great investment. But sorry. Now I'm probably gonna have family buying out here.
It's not a bad thing.
Yeah, well, that depends. Okay, so what other advice you got for a first-time investor going into a triple net property?
First-time investor, check the tenant, do your homework on the property, do your homework on what type of tenant you want to get, and reach out to the companies, reach out to McDonald's, reach out to the Starbucks, the Chick-fil-A's if you have land, and most of them are willing to negotiate with you directly. Or if not, contact us. We can always reach out. We have a lot of great connections at these companies. I have several connections with the Young Brands. I have, an RBI and a few other companies coming from Canada and other locations.
Okay.
So there's always new franchises opening up. There's always new opportunities to bring someone, if you have vacant land, onto that land for a single tenant.
So that's if you own land and you want to bring a franchise in, you can go direct to the operator.
Go direct, or you can look for a commercial broker like us.
Or a commercial broker. But if you are just a first-time investor and you want to acquire a Dunkin' Donuts or a whatever franchise, how do I go about that?
You would contact a commercial broker and see what's for sale,
what's available in the area that you want to pick.
Sometimes some brokers are a little bit more creative, or they might know somebody who is on the brink of wanting to sell. But always, first step, what I say is contact a broker. We work for free. They work for free. They work for you guys. They get paid by the seller. So, they love to do work. So I would say contact the broker and see what your options are.
And you can contact an agent and ask them, if you were buying, where would you be looking? And really, they can do an analysis for you and then walk you through the whole process. So, but it's a great way to invest. If you're a first-time investor, you're a little risk adverse. I think triple net's a great way to start, don't you? Maybe buy 2, 3, 4.
I think start with whatever you can afford.
Right.
But single tenant triple net leases are definitely the safest, I would say, investment right now, especially with stock markets going crazy.
Right.
Last 4 months,
stability.
It brings a lot of stability to a portfolio. It's consistent net operating income you can get.
Right.
I mean, there's very few downsides to it.
Right. Yeah. Okay. Well, I'm going to put Chris's information at the bottom here so you can take a look at it. Chris, thank you for coming in.
Thank you for having me.
And tune in next Wednesday, and we'll keep giving you some more great content. And if you haven't subscribed yet, please do. Thank you.